Rowles, currency strategist at CFC Seymour, joins us this morning. Are you paid in Hong Kong dollars?
I'm paid in Hong Kong.
So that's it. Lights out. You're going to be here forever.
That's okay.
You'll never visit your mom again.
That's okay. That's okay.
That's okay.
That's
I don't want to get into domestic issues here. Why are we doing so badly? If it's pegged, we should be as weak as the U.S. dollar, not weaker than the U.S. dollar. And we've seen even more weakness against the U.S. dollar than the U.S. dollar is against other currencies.
Yeah, fair enough. But it's really became the weakness. Really became at the beginning of the year when the whole parity issue came with the Chinese yuan, and when it made it through parity right at the end of January, it really accelerated. So it almost had this stance that it wanted to prove that it was going to stay pegged to the peg, and that so the two crossed. And ever since then, it's sort of been hovering at the 781, but lately it's gone to 780.
Is it coming under attack or anything? Are there hedge funds? Are there speculators? Is Soros trying to kill us, or like there were allegations 10 years ago that that's what was going on?
Not necessarily. It's mainly the whole point of the interest rates are still low. When you look at 3-month HIBOR compared to the U.S. 3-month LIBOR, the spread's about 90 points, and this should be about the same right now. But that spread has narrowed a little bit, so I think that looking forward, that like the whole point about the Hong Kong peg is that it's stable, which is great for the economy overall, and that's been proven to be an advantage time and time again.
How great is it? You know, when you ask the bureaucrats in the government here, you know, I mean, obviously they're not going to tell the market, yeah, we're reconsidering the peg, because that's it. Then the game would be over, and then it'd be, you know, then the speculators would be drawing a line in the sand. But they say, you know, they always resort to the same song and dance. The peg has served Hong Kong well for 24 years, and there is no foreseeable reason to dismantle it at any time on the near, short, or whatever horizon. Does it really serve us well? Because a lot of private sector forecasters say if the peg suddenly disappeared, we wouldn't be 781, we'd be like 7.25 or 7.3, which would immediately give us more spending power. True
from a spending power point of view, but it does create stability, and that's what the Hong Kong economy is so integrated in the global economy more than any other economy in Asia.
How global are we? We're a service economy now. We don't make plastic. You know, Li Ka-shing moved from making plastic flowers to owning a building like this.
For sure. But it's 85% serviced economy right now, where manufacturing is 4%. So that continues. With that, you need the stability, and that's what the Hong Kong peg provides. Just comparing it to other currencies which are battling the whole, like the Thai baht, the whole export issue, with their Philippines, same situation.
What about import inflation? You know, the beef traders have been up in arms because you know, the monopoly importer from China hiked prices, and they don't like that. Pork prices are going up. Even my mother-in-law is screaming bloody murder that her choy sum is not $4 per caddy, but now closer to $8 per caddy. I mean, $4 may seem like a drop in the bucket, but, you know, inflation is obvious. You go to the stores, you're paying more for just about everything. I mean, your six-pack probably costs more than it did a year ago.
Yeah, no, fair enough. And it's not reflected in the inflation rate, but that's because of other factors of rental issues falling off last year. But where it really, you know, that's $1 million question, is where is inflation going to be, and those inflation pressures are going to come in. But the main problem with the overall Hong Kong peg is that Hong Kong loses its ability to control its interest rates. And with the U.S. Interest rates, we hold the view that to be cutting rates, Hong Kong will have to follow suit. And what that could create is somewhat of an asset bubble potential maybe next year. So that's the main concern about the Hong Kong peg.
We do have a bit of an asset bubble already, don't we? You look at what the property is doing. You know, rents are shooting through the roof in many cases. I'm sure your landlady or landlord probably hiked rents, right, after the last lease expired?
Oh, for sure. For sure.
And he smiles. He smiles. What are you?
I'm just happy to be here. I'm just happy to be here. But overall, I think that with rates coming down in the States, Hong Kong rates are going to come down. But I do think that money supply issues should fall down, and that should increase. Okay. The spread should narrow a little bit even further, so the Hong Kong.
So the peg's intact then. Forget attacking the peg. It's really not going to go.
It's not going to go anywhere, and I don't think it should go anywhere.
What about the yuan? I think the offshore synthetic market says 7.2 or something like that a year out. Is that where we're going to be? Is the And then the people in Capitol Hill, the hawks, they'll be zipped shut, right, their mouths, because they won't have much more to talk about.
Exactly, and that's sort of what happened last week with Paulson. Just there was no real events there, and that's what I expect to happen for the rest of the year. And so sort of like a 5.5% gain is what we expect to continue with the won. So look for that imported inflation you're talking about.
Sorry, what percent gain?
About 5.5%.
5.5% over a what?
A 12-month period.
That's not very much, or is it? No, I guess that would bring the gains.
It's a pace that it's on right now.
15% then, right?
Yeah.
Something like that.
Yeah.
Okay. Steve, hang on, okay? Well, we'll come back just a couple more minutes. I want to pick your brain on the Singapore dollar. Some say it's probably going to hit an all-time high the way things are going right now. Steve Rowles, thanks for staying, by the way. I know Steve Rowles from CFC was going, when's this guy going to shut up here? But we do need to move on and talk a little bit about what's going on in other Asian currencies. Hey,
sure.
let me ask you, okay, we've been sort of droning on about the Hong Kong dollar. What else is interesting to you in Asia these days? Is it the carry trade? Is it the high yielders, the Kiwi, the rupiah? We've been seeing some of those positions unwind.
I think the most interesting thing for me right now is just looking at Philippine peso. It's one of those Philippine peso.
Because
it's an interesting currency. I think with the strong remittances coming in each month, that it's really helped drive the inflows there. Stock markets seems to be doing quite well as well. And for the peso is that imports. It's such an import-dependent economy that they're okay with having a stronger peso. So they're not too worried about their exporters being affected with having a strong currency.
Does GMA have a grip on the country? Gloria Royal? Or are there still... what is the Philippines without colorful politics, right?
Exactly. It's a good... it's a good movie star sort of political election. It's just like it's like the U.S.
Is it irrelevant now? What goes on in the capital, in the political chambers?
Well, it's very relevant. But I mean, we saw the election was 3 months ago, and things are quite stable there. So overall, political stability is stronger than it is.
We've gone from 51 a year ago to 45.
Yeah.
Now, which is 10%, something like that.
Yeah, and look for further 42 and a half.
And more upside ahead?
Yeah, absolutely.
How much?
I think 42 and a half by
Actually,
the end of the
year.
year.
Went from 50 to 30 to 20-something 30, didn't it?
Yeah, exactly.
So same trajectory for the PHP?
Yep, I think so.
What time frame?
By the end of the year, I have 42 and a half. So today, I think it's today, we get CPI numbers out as well, which should be a little stronger. So could see some further possibility of tightening because of money supplies continues to be quite strong there. So look for further appreciation.
Is this your favorite? Is it your number one trophy trade?
It's my number one trophy.
Really?
Yeah.
Okay.
And it's strictly because of they're okay with having a higher currency because it helps with their imports.
I'm going to talk to my partner Kathy Yang because she's a Philippine national, and maybe she can open me an account at Metro Bank or something like that.
Maybe, I don't know.
Hey, BNP, the folks at BNP, are you friends with them?
Sure.
Okay.
Of course.
They say the Sing dollar could hit 10% stride in the space of 12 months out to a record. I was there. In fact, I worked for the national broadcaster in 1994 when the Sing dollar hit 1.4 against the U.S. dollar. And people were going, holy cow, it's way too strong. We're not going to be able to sell our drugs, our pharmaceuticals and our Seagate disk drives overseas. Do you think the Sing dollar has
that's why I think that's quite a strong forecast, because if you look at the electronic exports, have been way down, negative double digits.
But it's being offset by, the drug R&D as well.
Yeah, exactly. But I think that the electronic sector is such a major sector there that it will have to come back into play. And that's what's great about the Singapore economy is that it is so well diversified.
You know what they've got though is they're really turning themselves into a hip new place.
Yeah.
That's
exactly.
what they would claim.
Well, they try to be hip.
Well, no, and now they have Durian there, that really sharp, the theaters on the bay. They've got the integrated resorts coming. Sentosa Cove is going to be turned into I think a mega yacht haven or a yachting haven or something like that. They've got Formula One racing coming in. How sexy can a city get? Isn't that going to draw in tons and tons of liquidity?
For sure. And that's why we're seeing the property boom and the construction boom, and that's why inflation is starting to come back into play here. That right now inflation is contained, but expectations are that it's going to continue. So, I do think that the MAS is going to adjust their modest gradual appreciation and not be as modest, but I think that My forecast is for about 147 for next 12 months.
Next 12 months. Okay. But what do you think the line in the sand is going to be? Do you think 1.4 is the litmus test for the MAS? There must be a certain, a red alarm, kind of a DEFCON 5 alert for the MAS.
Yeah, well, and just looking at their past performance of the currency, it really hasn't moved that much until the past month. So I think that would 145.
Hey, I appreciate your time today, okay?
You bet.
You're going to come back, aren't you, even after that?
For sure.